Welcome back. HCL Technologies numbers are out, and whichever way I cut and dissect, numbers are above estimates. IT companies surely have surprised us on the upside. First it was Infosys, then it was TCS, and the third one is HCL Technologies. Of course, Infosys really, blasted after numbers on the upside. From TCS and from HCL Technologies, we should not expect similar quantum of reaction, because HCL and TCS, they both have been marked outperformers for the year gone by. In fact, if you look at the YTD change, HCL Technologies is still outperforming the index, and it is still outperforming the IT index by quite a yardstick. So good set of numbers. Numbers will be well received by market men. But in terms of a stock reaction, I mean, will the stock go to 750 or 800? To my mind, the chances are low, because at about 750 rupees, HCL Technologies will be trading at something like 17-18 times. 17-18 times, I think, is the at-max P multiple which markets would like to ascribe to its stock like HCL Technologies, which currently has operating profit margins, which are still, the lowest in the industry. But Ashwini Gujral is ready. Let's go to him for his trading ideas. Hi, Ashwini.
Hi, Nikunj. I think Nifty is becoming extremely difficult to trade, and post a false breakout, it collapsed yesterday. Now, Reliance also made an attempt to break out yesterday, which may fail, as we saw in the last half an hour, that Reliance, instead of moving higher, kind of closed around 865 odd. Once, even Reliance rally fails, chances are that Nifty would correct, more sharply and deeper. The idea has to be to wait for this corrective decline and re-enter whenever the market gets close to 5800, 5850, because there is a channel and a trend line which starts from 4800, kind of ends around 5850 right now. Overall, on the Nifty, we need to stay above 6016. Resistance comes in at 6047 and 6079. Support comes in at 5977 and 5953. Bank Nifty needs to stay above 12,696 and CNX IT above 6769. BTST from yesterday, Reliance was a buy with a stop about 855, target of 910. Mahindra & Mahindra was a sell with a stop about 920, target of 870. Godrej Industries was a sell with a stop about 320, target of 295. Fresh calls, Pantaloon is a sell with a stop about 250, target of 234. Canara Bank is a sell with a stop about 515, target of 490. Financial Technologies is a sell with a stop about 1150, target of 1070. PNB is a sell with a stop about 900, target of 850. Zodiac Clothing is a buy with a stop about 224, target of 246. And Phoenix Mills is a buy with a stop about 247, target of 274.
Ashwini, hi, morning. Good performance from HCL Technologies. Do you think it can in any chance replicate what an Infi did, or do you think the good news is already in the price for the IT space?
It will behave similar to TCS, because the expectations were high, it's delivered. But, I think given the stage of the market, you are more likely to see an exhaustion gap. Infosys was different because expectations were low, the stock had not rallied, in fact it had declined over the last many months, and hence there were enough short positions. I would be surprised if, HCL can only hold on to its gains for the day. Certainly not a buy on this news. Maybe at lower levels you need to look at buying HCL Technologies around 625, 630. But right now, I think most of it is in the price.
Let's look at the 52-week change for HCL Technologies, Nifty, and then Infosys Technologies. The point I'm trying to flag off here is that HCL Technologies in last 1 year has been a marked outperformer. That stock has seen a massive P expansion because of consistent delivery. So numbers are strong, but the scope of P expansion may not be there because it is already trading at 17-18 times. With operating profit margins, EBITDA margins of 18-19%, it's difficult to make a case that P multiple for HCL Technologies will expand further. So that big alpha trade, to my mind, in HCL Technologies is behind us. Ajay, we've discussed enough of IT, so let's discuss some other sectors. As a house, why are you bullish on DLF?
I think in case of DLF, we're expecting the fact that interest rates are expected to come up by 75 to 100 basis points will sort of aid the company. It has a very large amount of debt, around 22,000 crores of debt. It is on a path to sell a lot of non-core assets. We saw the DLF land parcel being sold to Lodhas, 2,700 crores being realized out there. Aman Resorts has also been sold for $300 million, ex of Delhi property. That money is expected in this quarter. And I think today's Economic Times does the headline talks about the wind assets sale also sort of going through. So I think these three main non-core assets which the company was looking to sell over the last 15 months, we have today I think almost near the completion of those three sales. We are expecting the debt levels to go down to around 18,000 crores by March 31st and a further couple of thousand crores by June, because the company has committed to do an equity issuance, and that will also ensure that the promoter stake comes down in compliance with the SEBI norms. So I think from 24,000 crores of debt levels, we are looking at around 18,000 by March and around 15 to 16,000 crores by June end. I think that will really help aid bottom line growth. Macro, as we just discussed, we are expecting RBI to sort of signal the start of lowering of interest rates by a 25 basis point rate cut in January policy, and over the next 12 months around 100 basis points rate cut. So that should help aid demand environment. The company has launched 2 marquee projects in Gurgaon that should also start contributing for sales in FY14. So I think from this holistic perspective, we feel that I think DLF should be looked at. It's been sort of we've been pushing the stock for last nearly a quarter or so. The stock has done well. We expect the stock to continue to do well and touch around 300 rupees of price in the medium term.
Okay, let's also tell you what Deepak Mohani is actually recommending in trade, and he's got a buy on Bank of India this morning with a stop at 368 and an intraday target of 393. Bharti too is a stock that he recommends buying into with a stop at 202.50 and a target of 214 intraday, and recommends shorting BHEL with a stop at 231 and a target of 221. Okay, quick break then on that note. When we come back, chat with Adrian Movat of JP Morgan.